How's it going, guys? This is Forensic Forks with Deontay, and I'm back with another video. Welcome to July. We finished June. You saw how we executed UJ all the way from the beginning to the end. Now we're starting over with a new pair. We filtered out a lot of the pairs, and what came down to be the best one, in my opinion, through my filtering process, was US dollar versus Swiss franc. So we're going to be going with that. What we're going to be utilizing is the macro, interest rate differential, the seasonality, small range, large range on the monthly chart, and if the look back data range, and look at a couple scenarios. So let's get our feet wet with what we're probably going to approach for the month of July. So before we even look at the price action, let's talk about some of the macros. So there's a huge interest rate differential between these two banks, the Feds and the Swiss National Bank. There's a great difference between them, as you can see. So that's one reason I was favoring this pair. I felt like it was going to be a lot more dynamic and not going to sit in a consolidation because one central bank had the higher rate and investors are more likely to go towards the fiat currency or the central bank that has the higher rate, which is the Feds or, as we know, King Dollar, not back into Swiss franc. Seasonally, I like that they weren't aligning. I'm glad that they weren't both bullish or both bearish. I'm glad that they were both opposite to each other. That was another reason why I selected this pair. Now, just because it's bearish doesn't necessarily mean that this pair is going to sell off, right? Just because they say Swiss is bullish doesn't mean that this is going to actually come to fruition. The seasonal tendencies are more like a treasure map. They get you close to the treasure. It might not be accurate, right? The coordinates might be off, but you'll get really close to the answer or the truth, or it could be completely skewed and be incorrect. And price is not going to follow the seasonal tendencies. So we also have to align price with that as well. But we can start to paint certain narratives along with these ideas. The monthly chart as well. So let's jump onto the monthly chart. The monthly chart last month was a down closed candle and it was in a small range. So not the wick, we're talking about the body in itself. So looking from this month, looking back the last 3 to 5 months, we can see it's a pretty small candle. So I'm expecting that July is going to be dynamic and large. That doesn't mean we're going to get another large candle or we are going to get a large candle. It could possibly be small as well, but we're trying to take educated guess and put things in our favor on natural cycles in the market. Anytime we get a small monthly candle or small daily candle or small weekly candle, those are our opportunities to strike and attack the market. So when the market goes small, we need to be paying attention and being focused. So I'm focused right now on July with a large candle most likely going to approach us and push up to the upside. I want to see if this is going to be a higher swing low via higher time frame monthly chart. You know, two down closed candles, counter trend candles. If this trend is going to continue to trend, it's going to happen after a down candle. So let's see if that comes to fruition. We're going to go back to the daily chart. I'm going to use something called IPTA look back data ranges. And what I like to do is we'll start on the beginning of the month. So the first official trading day here. It's still technically Sunday, but Monday candle is open here. We're going to go 420 bars. Now, the reason why we go 420 bars is because every 20 days, the market is going to be seeking a new liquidity pool, whether that's buy side or sell side. Or sometimes it will range in the next 20 days. It could be very back and forth and whiplashy. And that's just what we're going to have to live with. We're going to go back 20 bars. So that's our 20-day quadrant, our 40-day quadrant, and our 60-day quadrant. Now, at this point, what I like to do is I like to find the highest high in each one of these quadrants because these could be significant levels that the price action is going to react around. Price can give us a dynamic trade setup, whether that's in a kill zone or not, or it's just going to give some type of setup around that level. Now, even the levels that we are going to mark off in just a second, even if they are broken already going into July, they can still be significant. So we got 20, 40, 60 looking back, and then 20 days going forward, which is essentially the entire month. We're trying to look for a swing trade or find a set it and forget it position in hopes of finding a trending environment. This only works if the environment that we're trading in is trending. If the market is not trending, it's going to be very difficult to find a swing trade or position trade. We would more likely have to find intraday scalps or intraday setups. I'm going to find the highest high and lowest low in each one of these quadrants. So this is the lowest low. That's our 20-day look back low. Now, not all levels during IPTA is tagged or used. I want you guys to be aware of that. Looking for the 20-day high here. I do know we do have on the channel a series called the IPTA Look Back Library. And you could take a look at that and you can see how we utilize that and see how price forms around it. Now, not every single month is it perfect, but it will give you better insight. And look for the 60-day low. So right here, correction, 40-day low. And then we're going to look for the 60-day low. So we have all those levels marked up. Now we also need to add one very crucial thing, the opening price to the monthly chart. Now, if I'm coming in with the stance that July is going to be a bullish month, I'm assuming that price is going to more likely drop down and then rally up, because that's one of the characteristics to a bullish month. In that scenario, at least, we can see price drop down, make some type of fake move on retail traders to pull traders short. While price is dropping down, are we looking for shorts? No, because if we're taking the long-term stance, thinking that the higher time frame is going to push us higher, we're waiting for only that long opportunity to happen below July's opening price. It's ideal to find longs below the opening price for the monthly chart if you're looking for a position to hold for the next 20 days or then some. Now, vice versa, if we happen to change our stance or for some reason along this month we say, yo, we're going short, we're more likely going to want to find that short above July's opening price. Now, there are times where that monthly range expansion is really quick. It gives traders no opportunities to go long or short. Sometimes the first day or 2 days, or even the first week in general, it's just outright bullish and it continues to trend. And that best buying opportunity is left in the dust, and we don't get an opportunity to get that. But we will formulate other trade ideas to enter that trend. Same thing, vice versa. If this month were to go down and be bearish, sometimes the first week or first couple days, nobody gets a chance to go short. It just starts to drop outright, and we miss that premium sell opportunity. However, we can still find ways to get into that trend. And you guys know we're going to talk about it as we progress throughout the month. Now, let's talk about some scenarios. Now, right now, I can see that price is near this old 60-day low here. Price may inevitably trade up into it, give a nice reaction and sell off. Now, the first week is NFP week. I do think we have a U.S. holiday this week. I think it's Thursday. I don't know if the market's going to be closed. 4th of July, it should be bank holiday. So I wouldn't look to trade Thursday per se. In this first week, if you're not an experienced trader, I would tell you leave the markets alone and reanalyze it going into the following week, the second week. The first week normally is going to flush out a lot of the traders if the Judas swing is going to lure them counter to where the higher time frame trend is going. So the first week might just trade down, flush everybody out, and then push higher. The same thing we watched in UJ last month in July. So in June, for those that remember, we had that first beginning of the week. It dropped down and it rallied for the rest of the month. We could possibly see the same thing similarly here. Possibly. So something like this, down and up, right? Running to buy side and selling up. We have the sell side liquidity pool down here. We could see that ran out. Right? Want to see a sell side, get traders in short, and then price probably coming back up. Some type of smash candle after a down candle, we most likely want to look to buy if we're trying to catch an edge on this market. So after those down days, going into ideal trading days, maybe Tuesday, Wednesday is down, right? Tuesday's down, so we buy into Wednesday, or Wednesday's down, we buy into Thursday, or maybe even possibly Thursday's down and we buy into Friday NFP and price pushes up. Or any given week, we'll do that as well. That's just one idea. And you'll see that as we go along and progress. Those that have been rocking with me for a while, you know these ideas. Counter trend candles are your best friend when coming to indicating when you should be buying or selling. Now, let's say if we were bearish, right? What's a scenario that could happen? Price can come up, take out that 20-day high, probably even fill in this inefficiency here, right? Move into a premium territory for the month. And if you take a range high to range low, cut that in half, you can see that we're definitely well above or close to equilibrium. And we're pushing back into a premium price, more expensive. Price could then look to go short, something along like that. And then we're going to get lower swing highs and lower swing lows, and price is probably going to trade down to that 20-day low. Now, if that is correct, we will follow suit. After any up candles, we will look to go short. We still would follow our bullish trend formula. If price breaks a swing high, we want to see a higher swing low form and that pattern continue. There will be fake outs on the way. We all know that. There's sometimes false breaks that get traders too amped up to think, oh, it's actually going to crash or it's actually going to rally. Well, in fact, it might be just a false break. So sometimes you got to wait for confirmation. On top of that, we will compare that to the DXY. So let's jump to the DXY real quick and briefly just mark it off. That's right. You got a clean slate. This was last month. So I'm taking that IPTA that we used from last month, I'm shifting over. So everything is going to be cleared. Even though there's certain levels here that haven't been tapped into, they might be used in the following month as well. So we go to July here and we do the same exact thing. Nothing changes. 20 bars here. Again. Now the first episode is normally the longest because I want to explain everything so that we're not confused on the way in this month. We got that. Cool. We got our opening price. Now, if it's going to be bullish, we want to see it drop down and then continue to push up. There's sell side liquidity below here, so we could raid swing lows, false breaks maybe, and then push back higher. Let's mark off that 20-day high. Got it up here. I'm going to do this for all the quadrants. 40-day. Tapping, trading down into the 40-day here. Could be see something happen along the lines there. Here. I'm going to look for the lows. The lowest lows in each one of those quadrants. We're not looking for any low. We're looking for the exact lowest low of each one of those quadrants. So there's another one here. And then we're going to look for another one down here. There we go. So if we're looking for price and dollar to gain strength this month, we want to see price come down and raid sell side and give a fake move on traders. So buying after a down day. You can see even with this leg up in June, right? You can see a little bit of that we were talking about. After these down candles, look how dynamic price is. Down candle, dynamic. So if you have the narrative of a bullish leg unfolding, you better pay attention because those down candles are your indication, your natural price indicator. Remember, indicators are detrimental to a trader's development. I say that all the time. That is one of my models I stand by. But natural indications in the market, right? Just raw price action. As the operator, as the trader, you need to understand what the market is telling you. When you come here and you listen to me, I'm not going to guide you wrong. We may not get the bias right away. And sometimes we might be in challenging environments where price is just ranging back and forth. What can we do about that? We might switch over to another pair that is more feasible to trade or more dynamic than the current currency pair that we're trading. Like the yen cross is still dynamic. Even though we're looking at USD, we can still jump into those other yen crosses when things look tough for the currency pair that we're tracking for the month. That doesn't mean outright, yo, we just stick to USD for the entire month. I'm just showing you guys the perspective on how I like to track daily price action so that you guys get an understanding of how you should go about it as well. There's a system to it. There's a flow to it. You can't force this. You just can't. You got to let the market come to you. Then you execute. You look for those subtle characteristics and signs and signals that tell you when to buy and sell. Let's go back to USD. If price were to trade down, the lowest point I would want it to trade down is probably to this swing low. Read that and then go higher. If not, it might just keep going up. Now, another thing besides the DXY, now I got to talk about. I know I'm bouncing around a lot, different charts. We're going to look at the Swiss futures. See if I have it up here. I don't think I do. I do actually. Of course I do. We'll do the same thing. Nothing changes. Come here. 20. You can see there was a nice sell-off at the end of that month or the midway of that month right here. Look at this Larry Williams smash candle. Price gets here. That's a sell signal for those that know what I'm talking about. I'm going to go for 20 bars here. And there we go. Got to stay consistent to a methodology or an ideology. We don't want to change up too much. We want to keep it as natural as possible. 20-day high, right down here, 20-day low. This is all the prep work that we have to do in order to get a better feel of what the higher time frame is most likely going to draw to. I don't ever want to say that we're always going to be 100% right, because it's impossible to be 100% right. It's all about speculation and taking the risk. We manage the risk. We're going to lose. It's inevitable. We are going to take losses along the way. But we want to be able to manage how much we lose and how much equity we can actually deploy and utilize long term. It's a marathon. We don't want to be a sprinter when it comes to trading. We want to stretch that equity across as long as possible over the years in our trading career. We don't want to blow funds quickly. Slow and steady wins the race here, always. If this is going to be a bearish pair or a futures market, I want to see price move up above the opening price and then go short. Maybe run this swing high up here, right? Rates buy side and then go short. Maybe even trade back into a bearish order block theory. Maybe this candle here, trades up into that, and then it looks to go short to take out the sell side liquidity pools down below in price action. Or like I said before, sometimes it might just outright just keep going down. And you gotta be able to pay attention to those signs that the market is gonna leave you and the trend is already gonna unfold. It's not looking for any fake move to get traders on the wrong side. That Judah swing may not come. It may not actually happen. So pay attention, be very vigilant. This is just the beginning. You don't have to do too much. We're not even looking for a trade idea. We're just trying to visualize. A big part of my process of trading is visualizing what I think the market can do. I personally don't go down to a lot of time frames and look for PD arrays. Oh, the 4-hour this, the 1 hour this, the 30-minute this. That's just my take on it. I know other folks may do that, and you might find success in doing so. But me personally, I like to keep it as simple as possible. Break it into ranges. Are we expensive or are we cheap? What are we most likely expecting from the pair? Or what are the other correlated or inversely correlated pairs saying? So if if I'm taking the sense that USWSI is going to be bullish, that means I'm taking the sense that UCAD is going to be bullish too. And UJ is going to be bullish as well. And that means inversely, I'm taking the stance that EU, GU, NU, and AU are going to be bearish. So there's an intermarket analysis as well. We can't just have our blinders focus on USWSI the entire month. It's a blend of ideas. It's a blend of concepts. It's a blend of other assets. It's a blend of other pairs. Hopefully you find this insightful. I'm hoping you guys the best. Peace.